And, the reason for the fear, I would say, is because, like in 2008, well, pre-2008, what was happening was banks were writing loans and giving out loans to pretty much anybody and everybody who could speak English and put a signature on a page.
It was an underwriting problem.
Yeah, there was a real bad underwriting problem, and they didn't really enforce it. So they were giving out loans to people who couldn't afford them. Now, what's different is, even though you are paying a higher fee in some cases, depending on where you are on that spectrum, they're still going through the underwriting process. They're still tearing apart your credit, making sure you can afford it.
They changed the underwriting process.
Yeah.
It is 10 times harder to get approved for a loan than it was pre-2008.
Yeah, it is not like how it was back in the early 2000s or any time before that.
Yeah,
it
we're
is,
not going to have
it
a
is
bunch
very
of people
different now.
that are making $10 an hour. They're buying homes for $500,000.
Mm-hmm.
It's not going to happen anymore.
So I don't think the market will crash because of it. I think, and if anything, we've already seen it already with the interest rate hike, that there is a normalization coming.
Yeah.
10 to 20% drop depending on what area you're in. We've seen sellers drop their prices to match what people can afford, and that's great. But they're still high, and they're still high because inflation is high and building costs is still through the roof. So that's going to hold up the real estate market for a while. But on top of that, down here in Central Florida, we have a big, again, inventory issues.